What are expectations for summer? How can we set ourselves up to win for summer, follow the trend, and not get caught up in the sell in May and go away isms and all sorts of other distractions that are only going to hurt our trading? How can we stay focused? Let's get to it. We're going to talk about daily time frames to do it. And, I'm going to squeeze in a little bit more data here so we can see the year in its entirety. 2024 laid out in front of us. And when we take a look at 2024, the reason that everything was so bullish for the first quarter was because expectations for rates were along the lines of 3 to 4 quarter point cuts, right? And then through April, we had to adjust and say, we're only going to get maybe 1 to 2 quarter point cuts. And yet, we are still making higher highs. We are still making all-time highs. So that just reminds us that any kind of cut environment, any kind of shift from hiking to holding to cutting is still going to add fuel to this uptrend, just not the same quality that we saw when expectations were so much higher, right? So this brings on two things. First of all, I know the fear is out there. And a lot of folks say, well, Rog, what if this is going to be a pullback to 5,100? I mean, we've seen a pullback to the anchored VWAP before. What would be the catalyst for that? It would be similar to what the adjustment was from the end of Q1 to the beginning of Q2. And that was, we might get no cuts. Now, here's something that's very interesting. There were 4 members in this last FOMC statement that said, we're not going to cut. But Jerome Powell made it very clear. He said so in the press conference, which I'm amazed was so overlooked, that those four members are by no means a consensus or even what the Federal Reserve is planning to do. He was very clear about that. And he's had to deal with some rogue members throughout this year, members that are talking their own opinion and not necessarily reflecting anything other than maybe their vote. And that may not even be their vote. They're talking their opinion. As long as the Fed Fund futures say we're going to get 1 to 2 more cuts, you might say, Rog, how are you so confident about that? Why would that be something that you are expecting? Well, we use data as always. So take a look at the CME FedWatch tool for why I'm still so bullish, aside from the uptrend and aside from the all-time highs that we keep climbing to. Let's just jump to December. By the time we get to December, expectations are based on the futures contract called the Fed Fund Futures that we will move off right here, the 525 to 550, which would be this column right here, and at least get 1 quarter point cut, or this would represent 2 quarter point cuts, right? So this 43% may not look all that impressive, but then remember, some of that spillover is here. So when traders say, yeah, we're going to get that cut in November or September, the reason that this column isn't taller is because that spillover is over here to that second cut. All right. But yes, I will absolutely acknowledge there is a 23.7% expectation that the rates go nowhere. But that is only the third possibility. This is first, this is second, and that is third. So the top 2 possibilities are a quarter point cut or 2 quarter point cuts. And this is why we continue to see all-time highs in the S&P and the NASDAQ. All right. Now, notice I didn't say the Dow. The Dow is not a place to be too bullish right now. Okay. That being said, what about sell in May and go away? Does anyone think that worked out all that well? Here's May right there. No, not at all. So please don't get sucked into sayings that rhyme, right? And buying, or in this case, selling into that. It's actually not true. So let's do this. So what this is right here is a seasonal look at the SPY, the ETF. And what I'm going to do is show you the rhythm throughout the year. This is May. Now, if there is something, and I'm open, if anybody out there can find something that rhymes with April or maybe March, right? And say sell in March and go away. That might be true. Sell in April and go away. It just doesn't rhyme. So take a look at May and what happens subsequent to that. So we have a pretty good window going into the end of July seasonally over the last 10 years where this could continue to climb. Are we going to get some volatility? Absolutely, that's possible. But when we have, again, the wind at the price actions back of elections, which are typically bullish, and forget the elections, that's in November, but just the summer seasonal with expectation of a 1 or 2 quarter point cut, it's tough to be a bear. Or as they say, all-time highs are never bearish. If there's going to be a significant pullback, I would not expect anything greater than 51. As you can see there, about 51.16, and I'm not even expecting it. But if you're talking about ROG, but what if there's a sudden adjustment, like we saw from March to April, where that no-cut narrative really gains traction? There you go. That's another way to do it. If you've watched previous videos that I've cut and they're here at the Simpler Trading YouTube channel, you know that we've done something called a sanity check, where we look at a 5%, a 10% pullback to get some perspective. So I thought I'd show you another way to look at it here in this update. Let's stick with the long side, and let's also remember that if you are looking to the long side, what are the sectors that are leading the charge? Why is the S&P and the NASDAQ so strong? Look at the sectors that are sitting atop this list. These three are 3 of the 4 sectors weighted within the NASDAQ. Semiconductors affect the S&P. XLK affects the S&P, right? So you can see that the top 3 are absolutely, this is what's the strongest, and they benefit the NASDAQ the most. So if you're looking to drill down into individual sectors and stocks where there's strength, keep an eye on semiconductors, technology, and communications. After that, by the way, comes in healthcare and consumer discretionary, which happens to be the 4th heaviest weighted sector within that NASDAQ. All right. So that's where we sit as we wrap up Friday. We're going into options expiration next week. It will likely be a choppy second half of the week, much like post FOMC led to kind of choppy Thursday, Friday, although we're still bullish. As we go into OpX, there will be a lot of volatility. We'll talk more about the open interest tractor beams in the Sector Secrets Mastery, and I'm sure in the other rooms. And that will be a big part of the way in which we'll look at which way price action is likely to go as the Max Payne narrative becomes the story for next week.